Prime Minister Rishi Sunak and his Business, Trade and Secretary Kemi Badenoch have welcomed a momentous deal for Airbus and Rolls-Royce to provide new aircraft for India. Air India has unveiled deals yesterday for a record 470 jets from Airbus and Boeing, accelerating the rebirth of a national emblem under new owners Tata Group as Europe and the United States hailed deepening economic and political ties with New Delhi. The provisional deals include 220 planes from Boeing, 250 from Airbus, and it eclipses previous records for a single airline as Air India vies with domestic giant Indigo to serve what will soon be the world's largest population. In the UK, still in the UK, inflation, measure of a rate of price rises, fell to 10.1% in the year to January from 10.5% in December. Price rises slowed for a third month in a row, but inflation remains near a 40-year high. For more on these headlines, we cross over to London. We're joined by Rise business analyst Bode Ososami. Good morning, Bode. Thanks for joining us. What do you make of the UK inflation figures just out?
Well, the pound is down 0.69% as we speak. Prices, yes, just like you reported, are rising, but much more slowly. It was the third consecutive drop. And the more sizable drop was largely due to downward contribution from transport, particularly passenger transport and motor fuels going down, and restaurants and hotels going up, making the largest partially offsetting upward contribution to the change. Compared to last month, CPI fell 0.6%. That's the biggest decline since January of 2019. So it's a huge drop. Annual CPI came in at 10.1%, like you said, against the 10.5% increase recorded in December, and well below estimates of a 10.3% print. The index keeps moving away from the highest level we saw since January 1. When we saw it reached, although it's reached 11.1% last year, the ONS continued to also say that food inflation remains high in January at 16.7%. So I think my sense is the UK is not out of the woods. You tend to get the biggest declines in the earlier reads. So after, in the US, for example, they've seen 7 consecutive downside reads. It begins to get stickier after you get a few downside moves. And I think that will eventually happen in the UK as well. But there's more good news. The factory gate prices of goods produced by UK manufacturers also eased to 13.5% year on year in January of 2023, the least since February 2022, and from 14.6% in December. But the month-on-month PPI was up 0.5%, higher than 0.1% expected, and the revised drop last month of minus 0.8%. Of course, you know, factory gate or wholesale inflation or PPI is predictive of future CPI. My sense is the big issue continues to be the difference between wages and inflation, especially public sector wages. And of course, you know, that's what's driving all the discontent. According to the ONS, private sector regular pay up 7.3% annually between October and December, with a 4.2% rise in public sector pay. So if you look at 10.1 minus 4.2, you're seeing a gap of 5.9%, which is quite huge. And of course, means things are tough. So I guess this is going to continue to drive the Sunak to do a quick deal to avert more strikes. Bank of England believes CPI will fall sharply this year. They said it could fall as low as 4% towards the end of the year. We will see. I don't think this latest slowdown is enough to reduce BOE interest rate rise from 50 basis points to, say, 25, but the chances are higher as the Apex Bank considers other details.
And what are your thoughts on this Air India deal? It looks like it's a huge boost for the Western aircraft suppliers.
Indeed, it's a historic deal, and it seems India is really beginning to magnetize a lot of interest, particularly huge deals. Almost 500 jets from Airbus and Boeing to take on a domestic and international rival. Population is growing in India. The market is growing. the environment, more importantly, is seen as more business friendly, especially by emerging markets, standards. And this is a huge boost for the aviation supply chain, with the likes of Rolls-Royce set to benefit. Tata Group, which regained control of Air India last year after decades of public ownership, is certainly making the waves. I understand airlines, plane makers, engine giants worked tirelessly in London to chase as large a slice of the deal as they could, which is obviously too big for any single player. So it's interesting. Boeing has a chance to restore its position in India's single-aisle jet market and narrow Airbus's large lead. Airbus also wants a bigger pie of the wide body market, led by their rival Boeing. Rishi Sunak has personally applauded the deal. Joe Biden touted the deal as historic, saying the U.S. would lead in manufacturing, announcing that 200 American-made aircraft from Boeing will be, that's almost half of that deal. And of course, adding that the deal supports over 1 million American jobs. That sounds huge to me, but that's what Biden says. India, obviously, like Nigeria, has a huge, massive, growing middle-class market. But unlike Nigeria, it has leveraged that strength to attract huge capital and mega deals as investors are looking for decent yields in the right growing environment. UK Business Secretary Kemi Badenoch sees this as an early win for her. She says it's a significant boost for the UK's world-leading aerospace sector, and one which will help to secure thousands of highly skilled jobs across the country and drive growth. Apparently, the UK are trying to do a $1 trillion deal with India by the end of the decade, which I hope is a good idea, given the fact that, which must be a good idea, given the fact that it's getting difficult for the UK to strike a deal with the US and the EU, and Africa and India look like the remaining options, even as China looks more toxic. I'm just checking again, the deal with India that they're doing could boost trade by up to $28 billion a year by 2035, even as UK aims to sell $1 trillion of goods and services a year to the world by the end of the decade. I just wanted to correct that. So the target is $1 trillion of goods and services by the end of the decade that the UK wants to sell, and they want to do a £28 billion deal with India by 2035. So clearly, I think emerging markets are hot. If policies leverage the entrepreneurial spirit and the huge growth opportunities, it certainly is the place to go.
Arise business analyst Bode Ososami, thanks for taking us through the headlines. We appreciate your insight.